We're a financial technology company. We build trading software for options trading, but predominantly what we do is we help brokerage firms better understand how to engage their clients from both a technology perspective, but also from an education and marketing perspective. So how to reach and engage their customers in better educating them for trading options and trading more sophisticated strategies and just having more awareness around risk.
What has been the evolution of retail traders?
Since pretty much the pandemic, the last 5 years has really been around education. We find that the retail trader today is far more sophisticated and has a far deeper understanding of the intricacies of options trading than looking back 10 years ago. The fact that retail traders are regularly quoting second-order derivatives like gamma is really something that we could not have imagined 10 years ago. It's proliferated in the trend of moving towards shorter-dated expirations because, we used to tell clients to avoid shorter-dated expirations because of the fact that most clients didn't understand second-order derivatives like gamma and how that affects the P&L of their strategies as it approaches expiration. But we're finding that clients more and more are actually not only understanding it, but using it to their advantage. And that's why they're preferring shorter dated expirations. That's why we're seeing more than 50% of the volume these days in option contracts that are less than 7 days from expiration. They're taking advantage of the fact of that convexity and they're trying to leverage it to their advantage. And that's really kind of one of the biggest trends that we've seen in retail in the last few years.
What strategies are they using?
A lot of times they're using very simple strategies. We're talking about just basic long calls and puts is still by far one of the most common strategies we use. But I will say, trading debit spreads, credit spreads, iron condors, straddles, and strangles are far more common these days by retail traders than just a few years ago. It's really because of the better understanding that they have of these types of strategies, but also just the tools for understanding and analyzing and finding these types of trades have advanced significantly. Even the things that we do here at OptionsPlay, what we do is we basically allow users to screen for a specific type of strategy across an entire universe of securities in seconds. Something that used to have to take hours to research manually now takes seconds. And it means that traders are finding the best possible opportunities to trade in the markets these days, and they're taking advantage of that technology.
What are your thoughts on the pattern day trading rule?
Whether or not that gets changed or not, traders who want to trade more often will always find ways to trade products that allow them to trade more frequently. So that's why we do see a lot more interest in options on futures because it doesn't have the same pattern day trading rules that listed options, listed equity options have. We typically deal with clients that are above the $25,000 mark, so it's not as a big of an impact on our business. But if you look at kind of the Robinhood and Weebles of the world, that would probably have a pretty meaningful impact on their business if the pattern day trading rule was changed or modified.
Are there opportunities in the prediction markets?
I think it's a really fantastic product from the perspective. It's really taking advantage of binary options and allowing traders to trade them. Think about things like interest rate decisions and FOMC meeting type events. There isn't a great way for the retail public to trade those types of events using listed options. It's not a clean trade versus the prediction markets are a much better way to cleanly get exposure to those specific events. Whether it's economic data, whether it's FOMC meetings, I think those are fantastic products for that.
How have new, smaller futures contracts helped grow the industry?
Whenever you have flexibility in size, it's always a benefit to the end customer. The only thing that we have seen, generally speaking, are those smaller sized options. The liquidity is not as good, and I think that we have to be very careful because there are plenty of those smaller products where the liquidity is just not there at all. I think for most retail traders, it's not that big of a problem because the market makers will make a market. They just don't look particularly tight on the screens. But if you're trading them, you can still trade a fair amount of contract size for a retail trader. I think for institutional traders, they have to be a little bit more careful on that front from a liquidity perspective because, outside of the SPX complex, when you do get into the mini options, the micro options, a lot of them, the liquidity is just not there.
What kinds of education are available for retail traders?
You definitely have a lot more participants in that particular space. As you say, there's a lot of them that fall into that finfluencer category. I would say within that category, it's a very wide gamut of what you get, right? But there's a lot of content out there, and the good thing is that most of that content is now available for free, and that's really kind of what's changed over the last few years, is that people have access to a lot more content, and because it's all free, people have just been able to put together kind of the best of that free content out there and been able to really elevate their understanding of options trading. Because there's been a fairly significant consolidation in the brokerage industry, that the education out there from the major brokerage firms have also gotten better. You just have fewer participants putting out more content, or they're able to put out more content on a much more frequent basis, and it's just providing a lot more education for clients to digest. And you also look at firms like Tasty Trade. They've kind of pioneered a whole industry of research for brokerage industries that are kind of in a separate entity to the brokerage firm, and it allows them to do a lot more in terms of providing color and research around strategies that if you were a brokerage firm, you would be perhaps limited in your ability to do so from a legal risk and compliance perspective. So I think that's been a huge change. If you look at or Schwab rather, they have their own TV network. They're doing content literally 8 hours a day. That is really what I think has driven the retail's exposure and ability to better understand these products.